All right, so good evening, everyone. How are you doing? Hope that you're all doing great. Welcome to another episode of Money Mindfulness Live, where we talk about what is important. All right, so here we have Grace joining us tonight. Grace is a licensed financial consultant, as a matter of fact. All right, so we have some more persons joining the live. Project I'm Worthy. Welcome, welcome. All right, so. Right. Sir, you're live. Welcome, welcome. Let me see. All right. Fantastic. Ooh, hello, Grace. How are you doing?
I'm
In the hair.
good. How are you?
I am doing fine. Thank you so very much.
Awesome.
So, how the month just started, I know, but how is it going for you so far?
So far, so good. Happy New Month. We're already halfway through the year. Can you imagine?
Right, we're in June already. It was May like yesterday. It was January yesterday. And we're in
Right?
June. Oh my
Yeah.
goodness.
Yeah.
Fabulous stuff. So
How about
today
you?
we're
How are
going
you?
oh, I am actually good. Thank you so much for asking. God
You're
has
welcome.
been great. Yes, indeed.
Awesome.
So today we're going to be talking all about insurance. So first of all, would you mind explaining to us just what insurance is?
Okay, so basically an insurance product, it's a contract between you yourself, if you are the insured person, and the insurance company, where it provides financial protection in the event of something bad happening or whatever is insured for, right? So if it's life insurance, then in the event of death, then that payment will be paid to the beneficiary. If it's in the case of things like critical illness or disability, that benefit is paid out to you as the beneficiary as well, unless if you have delegated it to someone else as a beneficiary. So it is technically that financial protection that they will give to the policy holders, beneficiaries.
Okay, all right. So thanks so much for that. And
Hmm.
can you please share with us why is insurance important?
Well, to just be general and to keep it short, it's actually a safety net that you can have over your life or for family, helping you and your loved ones to recover after something bad happens, right? It can be maybe in case of death, loss of life, right? In case of maybe damage to property or even theft, right? And sometimes in cases of maybe businesses, it may be a lawsuit, right? So it helps you better recover from such situations as well.
Right. And just a couple of months ago, I was driving past this business place, and instead of seeing the business place, it was just this black building and ashes. And I was
Mm.
like, my goodness, And come to know the persons, the business owners of that business, they did not have insurance, so they are
Oh.
gonna start back from scratch.
Mm.
It's a very sad reality. So that is why insurance is important, everyone.
Yeah,
So could you please share with
absolutely.
us what it would look like if those persons actually had insurance for their business? What would the reality be for them?
Okay, so in such a case whereby if they had a business insurance and also like had property insurance, insuring whatever building that they owned, right? If everything checks out well, you'll be seeing people actually like the insurance company will then be paying out whatever their liability amount was, right? So if they had maybe a 2 million or a 5 million or a 1 million policy, that will then be paid out. And the owner of the policy will have, you know, like they can do whatever they want to do. They can focus on maybe rebuilding the company or the building structure itself. They can focus on that, or they can focus on other things, maybe paying their employees for maybe the time that is being lost in between or something like that. There's so much things that they can do, but the good thing is that there's that safety net that they will have in their hands to help them recover, and the insurance company as well will then step in to help with that recovery process as well. So depending on whatever plan that they have, that will be important. So some of the key features in the insurance policies will be like, okay, obviously you have the policy owner, you have the insurer, which is the insurance company, and you have the beneficiary, like I mentioned before, like whether it's you or someone else that you have delegated as the beneficiary, and you have like the premiums that you have to be paying on a monthly basis. And just so you simplify that, premium is the amount of money that you pay for your policy to keep it going, right? Once you stop paying your premiums, your policy might lapse and you no longer be covered. So to make sure that you are covered, you will have to make sure that you will continue paying your premiums. And depending on what kind of policy you have, because sometimes you tend to find that there are some with higher premiums and some with lower premiums, right? So it's good to always shop around if it's for the same product and the same coverage and the same length, right? It's good to shop around, but at the same time, if there are different products, right, sometimes a higher premium may mean that the benefits coming from that are also more benefits, right? So you can also then look at it and choose to say, okay, if I'm wanting to have more benefits or more coverage, so to say, I should be ready to pay a little bit more for this as well. So those are some of the things that you look at. And going back to what you were talking about in that situation, if that person had maybe 10 million in coverage, right? Yeah. That would necessarily cover as many things as possible. But if they had little coverage, then they will just be limited in the things that they have to prioritize to fix after the whole thing.
Wow, interesting. So what are some kinds of insurance?
All right. So we have, you can say there's life insurance. We have like property insurance, which includes like the auto, the home insurance, and for anyone who has recreational vehicles as well, there's insurance for that. And then we have some business insurance for all the business owners, and there are so many different kinds of business insurance that people can leverage on, right? So if you're a business owner, I encourage you to talk to your financial advisor and let them tell you about the different options that are available to you, right? And then when we look at life insurance itself, it has actually other types underneath it, right? So under of life insurance, you have the term life insurance, which covers for a period between maybe 5 years, 10 years, 25 years, something like that, right? So the thing about this is it's kind of cheaper and more affordable for most people. So I always say it's better to have some than nothing, right? So that term insurance usually is a good go-to for most of the general public, right? And for those that have a little bit more money, and because they tend to be a little bit more expensive, they can look into options like permanent insurance or universal life insurance. And I will not, spend time for the sake of our time tonight, trying to explain the nitty-gritties about all this, but you can feel free to check in with your financial advisor so that you can really better understand, like, what is life insurance. And for the life insurance, okay, we have the term insurance, we have the permanent insurance, which covers you like for your whole life, right? And the same for universal life, it covers you for the whole life. But the difference between the two, there's flexibility in the premiums as well as the benefits as well, the death benefit for the universal life. So to really understand how that works and how you can leverage for that, for your family, for your business, and even like, for example, if you have a business and you have a key person in your business, you can also get life insurance over that key person, because usually, like, if that key person goes and work is dependent on that key person, and there's no coverage for that. Guess what? When they're not longer there, there's no more work, so to say, right? Like things are disrupted. So you have to be thinking about those things. So that's where you also, like, another insurance plan, like critical illness, comes to play, which is paid out when, like, that person maybe is diagnosed with the critical illness, maybe cancer, heart attack, stroke, things like that, right? And also disability, right? That's another great one that I always say, hey, especially for those that are self-employed kind of deal, and they're not working for a company, because most of the companies sometimes have insurance packages in their group plans, right? But for those that are self-employed, they underestimate, or they don't look at these things to protect them in advance. Because right now, if you're working and you being able to do what you do, is your source of income. When you can't do what you can do, what you're doing right now, then what happens? Your income source is cut off, right? So putting an insurance policy in that over that matters. And another type of insurance that I see most people overlook as well is long-term insurance, right? And long-term insurance is that coverage that people can have for when they grow older, or even not older, sometimes when you become sick and are not able to do your daily activities, right? Mm-hmm. There are some specific statements that they look around that to make sure that, okay, you qualify for this plan. But you can always ask your financial advisor as well to explain more and to help you see if you qualify for that. And the earlier, the better, because it will be cheaper, and you might be still insurable kind of deal. If you don't understand what being insurable means, you want to also ask your financial advisor as well. Yeah.
Right. Oh my gosh, this is also interesting, and there's so many different types of insurances that I did not even know about. So how does someone know how much life insurance they need? How does someone determine that?
Okay, so I can say, okay, when you are looking at it, right, think about what's your worth. What's your worth? Or if your husband or your partner is the one who is the income source for the family, just think about it in this way: what's their worth? Or what's their worth, so to say, right? So for example, if they are working and right now, and the expected time for their retirement is age 65. I'm just using it as an example. It may be totally different in other people's cases, right? So say, for example, they are 30 years old right now, and they're the sole income source, and they earn maybe 100,000 a year, right? And between now and the 65 years kind of deal, right? There's like 35 years, right, worth of that 100,000 each year. So if they die now, that is lost income. So that is what they are worth between now and then, so to say, right? So covering that amount, which in this case may be about 3.5 million, if I'm making the calculation right, just off the head, right? But it can, the calculation can be different if you add other things and all that kind of. But just to simplify for our discussion tonight, that would be basically part of how much they're worth, right? So making a coverage for that will be the best ideal situation, right? But you get to find sometimes, like, not everybody has that amount of money to be able to, spend over like a life insurance policy or something like that, right? So we also say, okay, at least cover at least 10 times or 20 times your annual income, amount, right? So at the least, if you can do that. So in this case, if that was 100,000 a year, so at least $1 million coverage, right? Get that $1 million coverage over your life, right? But if that fails, and if that's, because I know, like, people are at different levels and all that kind of stuff, at least cover your liabilities, right? So, for example, if we're looking at life insurance, you want to make sure that your liabilities in terms of any debt that you have, right, with a car loan, mortgage, and all that kind of stuff, at least cover those, right? And think about, what are your final expenses and your tax liability to your estate kind of deal. Because most of the people, they don't think about the tax liability over your estate once somebody passes away, right? Because you have to pay some tax, right? So people don't think about that, right? Especially like single people, they'll be like, oh, I'm single, I don't have a family and all that kind of stuff. So if I die, I die kind of deal, right? But there is a tax, obligation, right? So your family might be left to take care of that, and other fees that come to play, handling your estate and all that. It can be messy and it can be expensive, especially to those remaining behind. So it's good to make sure that there is that coverage, right? So just to sum up, right? If you can afford to pay what you're worth, or the worth of whoever is the income, like the sole income on whatever provider, make sure that you cover at least what they're worth. If you can't do that, at least cover 10 to 20 years of their annual income, right? If that isn't like most of, at least cover the liabilities that you have over your life. Yeah.
Wow. Okay. So is it, I want to know if there's a difference between someone, a younger person going in for life insurance and an older person going in for life insurance. Is it that one person might pay a little less or a little more than the other? And if so, then who?
Sorry, what was the question? What was the question again?
It's a little bit confusing. Is it possible that a younger person might pay less for life insurance than an older person, or the other way around? An older person might pay less, like a lower premium for their life insurance than a younger person. How would that go?
Okay, that's a very, very good question. Okay, so age is definitely something that they look at in terms of life insurance, right? And in general, younger people tend to pay cheaper premiums than older people, right? Because the way that they look at it is that when you're older, you're close to, like the expectancy, like death expectancy, life expectancy, yes, kind of deal, right? So, and as we grow older, like sometimes we become vulnerable to diseases and all that kind of stuff. Of course, there are other people that keep up with their health and all that kind of stuff, but with age also comes more challenges health-wise, so to say. So the older you are, the more expensive it tends to be. So it's always a great thing to consider getting life insurance when you are younger, right? If you missed it in your younger years, at least now is the time, and that's why I even advocate for insurance coverages for even babies. You can actually put a policy over there, because guess what? They're still healthy. I know maybe there's some that are born with some challenges and all that kind of stuff. Then that can be dealt with differently. But if they're born healthy and they're still young, right, guess what? Their premium is so little, right? And their health is just so perfect, right? So you can put some coverage over their life, and you can even pay. There are some plans where you just pay for 20 years and that's it, and they're covered for life kind of deal, right? And you just set them up for success, right? And some of these plans, if it's a permanent or a universal life, right, it can have some cash value in it that they can maybe leverage at a later time in their life, right, towards it. And if you want to understand more about that, that's another question that you can give your financial advisor as well. But like you were saying, age is a factor. And it tends to be cheaper for younger people than adults. As well, I can also add other things that they can that they also consider, right? Whether you're a male or a female, right? For life insurance, it tends to cost more for males for life insurance than for females. Yeah.
Really? I wasn't expecting that. Okay.
And then the funny part, actually, for
Yeah.
things like critical illness, critical
Mm-hmm.
illness, you tend to find it costs a little bit more for females than males
Mm-hmm.
for critical illness
Okay.
coverage. Why? Because they say women tend to live longer,
Right.
right?
I
So
was thinking about that.
yeah, so
Okay.
it's good to actually know some of these things. Yeah.
Yeah, super, super interesting. Okay, so at what point in someone's life should they consider to actually begin, getting insurance?
Uh, like I just mentioned, as early as possible.
Mm-hmm.
So this is something that should be part of your budget, right? Everyone's budget. I advocate for that, right? Because it's quite an important tool in your financial plan, and it's also like part of the foundation, right? Because just like any other house, if you build on a strong foundation, it stands, right? But if you build on a foundation that is weak, it will crumble when challenges come along the way, right? So
True.
like we were saying, okay, if you don't have life insurance, right, and your house burns down, right, guess what? You are back to zero, right? Because everything else is going to come out of your pocket. And if you didn't have any savings to cover that, then are you going to go in debt for that? Or what are you going to do, right? So those are some of the considerations that people have to do. And it's really, really, really key. So the younger and the sooner you can get yourself covered, the better. So, always I always want to just add this to say there are some people that say, oh, I don't even believe in life insurance and all that kind of stuff. If you're driving a car, right, you definitely have car insurance, at least if you're in Canada, right? So you must believe in life insurance. You must believe in insurance, so to say, right? So it's not about your belief in it. It's just the same way if we deny gravity and all that kind of stuff, whether you like it or not, gravity is
It's
gravity,
there.
right?
Yeah.
So it's just most of the time people will just say, oh, you know what, I'm gonna wait a little bit longer to get life insurance or to get a critical illness or disability because I'm healthy right now, so I don't have to get it right now, or the long-term life insurance, I don't have to get it right now because I'm still young and I still have long to go and I'm keeping healthy and all that kind of stuff. But life happens to people, life happens to every one of us, right? And some of these things, they happen so sudden, right? So it's like
Yeah.
gambling with your life, right? So don't gamble with your life, especially the finances for your family. Don't gamble with your family finances.
Wow. So very true. And such wise words. Thank you so, so very much. Now, before we go, what would you say to that one person who is neck deep in debt and does not have insurance, but wants to start, getting insurance? What advice do you have for that person?
Okay, so neck deep in debt, you'd want to work as much as possible. If there's an opportunity for you to increase your income, well, I'm assuming maybe your income might be a challenge at this time. But if you can find opportunities to increase your income, whether it's finding a new job or getting a second job, right, so that you can work on reducing that debt as much as possible. If you have good income and you can pay off this debt as fast as possible, then go ahead, do that, right? And like prioritize that as much as possible because it may eat back on your cash flow kind of deal because you don't want to start your insurance policy or your protection plans and then have to cancel them because you cannot afford them along the way. So if you deal with this, that is like a hole in your bucket. So patch it, so that you can start seeing some inflow and cash flow and like you can an overflow, so to say, right? So if you
Right.
can patch that hole first and then cover it, but if you have good income, right, you can also prioritize to say, okay, I can pay for what I can afford for life insurance at this point, whilst I'm taking care of this debt as well. that will also work, right? But this is something that you need to also talk to your financial advisor, because they can help you assess what you can afford and the options that are actually available to you.
Wow, incredible. Thank you so very much for sharing this wealth of knowledge with us tonight, Grace, all about insurance. Before we go, we're just going to shout out all the persons who joined our live tonight. And so I see with us, we have Project I'm Worthy. Thanks for joining us. Surf Your Life. Kemi374. Thank you. We have Money Savvy Tamisha. Thanks for joining us. We have F Chicks. We have Katie and Co. Yes, we have, what's this one? I do not want to read any of these names. We have Plain Grinning Catering. And we have Tenima Teixeira. Okay, and we also have Odette Fraser. Thank you all, everyone, for joining us this evening. And before we go, Grace, where can we find you? If someone wants to get connected with you as their financial advisor. We also have someone else who joined our live. This looks like Ngoshi. Repeat that, please.
Ngoni Shawa.
Thank you so very much. Beautiful name there. Thank you for joining us this evening. So where can we find you, Grace?
All right. So I'm on Facebook. I'm on Instagram. I'm on LinkedIn, as well as I have a YouTube channel.
What's the name of that YouTube channel?
YouTube channel that I have. So you guys can subscribe and look out for some of the new videos I'll be posting. I love to keep, educating you guys about all these things. So feel free to join me there and subscribe and share it to as many people as possible. We're going to post this as well. So make sure that you share it with other people so that they can learn the same things that you are learning. I'm pretty sure we didn't ask you guys to pay for this session, so the least that you can do is to just share it with others so that we can enjoy this knowledge together.
Amazing. Thank you so very much for being here with us another time, Grace. And we are looking forward to talking to you next month about another very interesting topic. Thank you so very much. Good night.
Good night.